Good morning, everyone, and welcome to Bloomberg UK, a news show with a special focus on the biggest challenges facing the British government, the British economy, financial services, and the markets. I'm Francine Lacqua here in London. Now, on the show this week, with just days until Christmas, the UK is grappling with its worst labour disruption for 30 years. We'll look at how businesses are coping with transport strikes during the crucial festive period. Also on the programme, how is the new winter of discontent affecting luxury retail at Christmas? Well, we're joined by the chief executive of London's iconic department store, Fortnum and Mason. Plus, with the UK set to enter a recession, we recap a turbulent year in British politics and finance. But first, we begin with the story that, of course, is dominating front pages in the UK today. Public service workers continue to strike over wages as the cost of living crisis takes bite. It's impacting everything from healthcare to public transport. And it couldn't come at a worse time for hospitality and retailers already struggling with the economic downturn and spiraling prices. There's also no festive cheer from the CBI, warning of a deeper recession in the latest quarter than previously thought. So let's discuss all of this with our UK retail reporter, Katie Linsell, and Bloomberg UK's John Stepek. So thank you both for joining us. John, I mean, when you called also that house prices could fall some 30%, I have to say it sent shockwaves, not only in markets, but all the way to like Brussels. So overall, we've had a really tough year in the UK. We're having an even tougher December. Does it get better or does it get worse?
Well, you see, this is the tricky thing for next year. I mean, there are elements for next year, trying to be a bit optimistic about it, that could actually get better. So the inflation rate should come down. No. Petrol prices are coming down. Beyond that, I'm kind of struggling a little bit.
He's trying so hard to be optimistic. John, come on, you can do it.
Well, the problem is, I mean, I suppose, so interest rates, mortgage rates have come down a little bit since the peak in October. But you're still looking at kind of like 1.8 million people coming off fixed rate mortgages next year. That means that the price that they're paying is going to go up. So that's an additive onto the cost of living squeeze. We have, there is a kind of wider issue as well in terms of the indebtedness of the kind of UK government and how they're going to deal with the strikes and what that means for the public finances. So there's another issue there to be concerned about.
Yeah, and John, I mean, this is, no laughing matter because a lot of people are also struggling. I guess even in your piece, you say mortgage holders are actually maybe better off than they were in 2008. And then I want to talk about retail because, Katie, I know a lot of people are struggling because they can't, or certainly central London bookings like pubs and also retailers aren't getting that footfall because of the strikes. But overall, consumers are still spending.
Well, yes, consumers are still spending for now. I think for sure when we look forward to early next year, it's going to get harder and harder when we have sort of credit bills coming through, credit card bills, and then also looking at mortgage rates rising for many consumers, and that's going to be much tougher. But yeah, the strikes couldn't have come at a worse time for retail and for hospitality. Bookings down, footfall down, I think it was around 10% at one stage last week. And that's down on the period before when we had Omicron last Christmas that put off many consumers going into retail and going into pubs and restaurants. So yeah, it's a tough time.
So are people worrying about the cost of living now, or are they saying, look, I haven't really had a good Christmas with my family for the last 3 years, I'm going to spend and then tighten the belt in January?
I think it depends on which consumer you speak to. For sure, we're not all impacted equally by this cost of living crisis, and there are those who are very wealthy and who are still spending big time, and also who are saying, Christmas is really important to me. I really want to be able to gift to all my loved ones and have a fantastic time. There are others who are saying, look, let's buy each other the essentials this year, or let's actually cut back from buying each other gifts within our families and really focus on putting lovely food on the table. So it really depends across the population, I think.
So, John, if you break it down, and we know that the UK is very reliant on house prices, and we could see, and you went through the metrics, and actually I urge everyone to go and look at John's newsletter because it beautifully, lays out the case for a possible 30% a drop in house prices. But if the labour market holds, will we be okay?
Well, I think the labour market holding is the main thing. Now, I still think house prices are going to fall, but I don't think that's necessarily a bad thing in and of itself. Because, about a third of people have mortgages, a third of people own their houses outright, and a third rent. No. At the moment, we have a massive affordability problem in the UK. So house prices coming down in and of itself is not necessarily a bad thing. In terms of consumer spending, in my experience, people tend to spend as long as they have money and as long as they have jobs. The main issue here is definitely employment. I think whenever we come to the kind of January reporting season, it'll be really interesting to see how the retailers kind of come out then. But the main thing to watch out for is, are companies going to be cutting back, or is the labour market still going to be fairly tight next year?
But the labour market is so tight.
Yeah, and
what kind of recession would we have to see for the labor, for unemployment to go significantly up from here?
Well, it would have to be pretty drastic, you would think. But the other reason that the labour market is tight is because we've got a lot of people in long-term sick. We've got a lot of people who have retired and stepped out of the market. We actually have a lot of students as well. So one of the tricky things at the moment is it's really hard to unpack how much of this is a hangover from COVID. I don't think we appreciate how much the pandemic is still basically mucking up the figures. So it's very hard to get a lot of clarity on what might happen going forward.
Yeah, I mean, that's the point of central banks in saying, like, look, it was muddled, and this is why we got the temporary inflation call very wrong. Katie, how are people spending differently? So I know you were saying, a lot of buyers are trying to trade down, but also go into things that are energy efficient, like air fryers, and I think energy efficient, what you were saying, like dryers.
Yeah, absolutely. So we saw Curry's report, I think it was last week, and they were saying that they are seeing consumers sort of try to trade up to more energy efficient items. So that is air fryers that have done really well. It is tumble dryers and washing machines that are more energy efficient, because people, they're not maybe as worried about the upfront spend as they're worried about their energy bills over time. So they're really prioritising in that way. We've talked a bit before about electric blankets, other ways we're trying to keep warm when bills are so high on our energy costs.
So are people overall, could we see them buying less, or just, buying as much but cheaper?
When it comes to food shops, we've seen people try and put fewer items in their baskets, try and stretch meals further across a family. We've heard of examples of people having to skip meals within the family. At Tesco's, for example, earlier this year, shoppers were saying, can you stop at £40? Can you stop at a certain spend, because I can't go beyond?
Yeah, and if you look at some of the inflation figures, I mean, we're looking at the price of egg milk. I mean, in certain cases, it's like up 15, 20%. Are we going to see peak inflation in 2023?
I mean, you would hope so. Apart from anything else, arithmetically, it's kind of got to peak. We probably saw it just there, actually, back in November. Energy prices, this is the other thing that comes down to how much of this cost of living squeeze is going to continue. Yeah. If energy prices come back and food prices stop rising, then you might actually find that next year we get real wages increasing. And that would be really positive. That would be a kind of upside surprise. But again, that all boils down to how tight the labour market remains. The good thing about this the problem that employers have had with hiring over the past couple of years means that even if they take a hit, they're much more likely to try and hoard labour in the coming year, because it was so hard to get the workers in the first place.
John, how much of this has to do with Brexit? So we have, the British Chamber of Commerce saying, first of all, UK businesses are suffering because of exports. And then we had also this think tank yesterday saying it's shaven off 5.5%, I think, of like GDP growth. And that's, of course, also, importing inflation. And that's because we have the strikes. Yeah,
look, I'll be honest with you. I don't see Brexit as being a massive issue economically. It's certainly not the major factor that's driving all this. One of the problems with think tank reports is that obviously a lot of them have a kind of political bias one way or the other. And it's just very hard to unwrap all this stuff. If you're telling me that you can seriously split out the impact of Brexit from a global pandemic in which we actually shut down the entire economy, then I'm sorry, I'm going to struggle to believe you. Inflation came as a surprise to the vast majority of kind of economists and analysts around the world. So I don't believe that you can split the difference with Brexit down to 0.5%.
All right, really interesting. Thank you both for joining us. Our UK retail reporter there, Katie Lindsell, and Bloomberg's John Stepeg stays with us. Also coming up on Bloomberg UK this week, we hear from the chief executive of London's iconic department store, Fortnum & Mason, on how the luxury retailer is doing this festive period. This is Bloomberg. Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, Brexit has damaged the ability of UK companies to compete in the EU. That's the finding of a survey from the British Chamber of Commerce. 77% of firms said the Brexit deal struck 2 years ago was not helping them increase sales or expand their businesses. Now, British department store Fortnum & Mason has also seen its European sales hit by Brexit disruptions. The upmarket brand, which is best known for inventing the Scotch egg, as well as special blends of teas, biscuits and Christmas hampers, is now looking beyond the UK and the European Union for its future growth. Well, we are delighted to bring some festive cheer, and we're joined by Tom Atherin. He's the Chief Executive Officer of Fortnum and Mason. Tom, thank you for joining us. I mean, it is really Christmas when you look at a Fortnum background. What has been the most surprising thing for you? So we're going through a huge cost of living crisis in the UK. There are strikes in central London. Are people still shopping more than you thought they would?
So, morning, Francine. It's lovely to be here. It is, without doubt, it's a tough trading environment. You know, with the war in Ukraine, inflation running at more than 10%, the backdrop of strikes, as you've mentioned. It's a tough environment. Businesses and consumers don't like uncertainty, particularly at this time of year. I think what surprised me most about Christmas this year is actually the return of footfall into our shops that we've seen. Against that backdrop, I think I've been really surprised about that. And I think to a certain extent what customers are looking for is that sort of moment of joy. I think they've rediscovered the enjoyment of shopping in person. And I think Fortnum & Mason really lends itself to that. You can't help but walk into this shop and for a smile to creep across your face. And I hope you can see in the background that, you know, when we open our doors, our customers come into the shop like a bullet out of a gun. So that's really good to see. I think the other thing that's probably surprised me is the strength of our international trade. I suspect a lot of that is down to the weakness of sterling, or the relative weakness of sterling compared to last year. Don't forget, this time last year we were up against some really a really tough background. We were still emerging from COVID. We had the latest wave, which I think was putting people off going out shopping and eating at restaurants. And I think that this year we're sort of through that. Our restaurants are full. We have a lot of events going on every night, so it's the return of Christmas parties. In many ways, it's the sort of it's the revival of Christmas that we saw pre-pandemic back in 2018, 2019.
And Tom, we're just getting, of course, breaking news from China, which is huge news, and a lot of the markets will kind of listen to this and take pause. China is to cut its quarantine for overseas travelers from next month. That would probably impact, of course, also your news store in Hong Kong International Airport for global travel, and of course the resumption of back to business in this post-COVID world. That's probably positive business. I can't remember. I remember seeing that I think you make about 60% of your revenue in this kind of festive season. How much will that change, or how much have you tried to change that and also be less reliant on the UK because of weaker pound and because of the strikes?
Well, it's interesting. I think historically we are a very Christmas-focused business. I think that's absolutely right. One of our opportunities is to think about how we can become more relevant to more people more often. And I think that there's a big opportunity in the UK for that. Our online business is now anywhere between 30 and 40% of our business. And if I go back to a world pre-pandemic, that was more like 5 or 10%. And I think what we're doing is using our online business as a way of attracting a whole bunch of new UK customers, actually, to a business. To a business which really has one flagship shop and a number of satellite shops in London. So it's opening up the brands to parts of the UK that don't necessarily have access to our business every day. So I think our online business is a big opportunity for growth. Before I even get to thinking about growth overseas, it's wonderful to see those restrictions beginning to be lifted in Hong Kong. We have a shop and a restaurant in Hong Kong, in Kowloon, which historically has served Chinese tourists from over the border. As you can imagine, that's been very quiet for the last couple of years, but I'm hoping that over the next few years we see a real resurgence in that. And I think a demonstration of our commitment to that region is, as you say, the opening of our shop at Hong Kong Airport last month. So I'm expecting big things from our Hong Kong team over the course of the next few years.
Yep. So who's shopping in your stores at the moment in London? Is it a lot of people from the US? Is it tourists? Is it British consumers? And have they adapted the way they shop?
So they certainly have. I mean, I certainly think they've adapted the way they shop in relation to returning into shops, as I mentioned earlier. I think that we're also seeing a big international trade this year, probably certainly more so than we saw last year, and indeed pre-pandemic as well. And in particular, those customers are coming from the EU, where we're no longer able to ship directly to the EU, and from America as well. So we're delighted to welcome those international customers into the UK. And of course, they're buying across the range. Not only are they shopping in our shops, they're eating in our restaurants, they're coming for afternoon tea. I'm thrilled to say that our hospitality business is doing really well. And as I said, I think people are looking for a bit of togetherness this Christmas, and there's nothing that brings people together, certainly at this time of year, more than food.
What's your most sold out product? I mean, I'm here with John Stepek, who's probably going to tell me he goes to, Fortnum & Mason for Christmas tea every day. But is there one thing that actually just flies off the shelves that you can't get enough of, Tom?
I think probably the one thing this year, and again that's really surprised me, is that we've sold out completely of pickled Brussels sprouts. They were $9.95, they've all gone. There are still a few jars, or a few bottles left of mince pie and marmalade liqueur, which is absolutely delicious. It's like a mince pie in a glass. It's really good, £35. So they're the two things I would that really jump out at me as being fantastic products this year. And actually, I mean, you mentioned the Scotch egg. We invented the Scotch egg in 1738. It's a really good example of the sort of innovation, actually, you can get from Fortnum & Mason, which is, I think, really the home of extraordinary food and drink.
Tom, thank you so much. Sponsored by Fortnum & Mason. I'm not sure about the pickled. I mean, I need to go online, take it in, have a think, and then get back to you. Tom Atherton, they're the Chief Executive Officer of Fortnum & Mason. Coming up, what were the UK's biggest moments of 2022, apart from Scotch egg and pickle things? Well, we, of course, look through the list of the record-breaking year that we've had so far. This is Bloomberg. Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, from Queen Elizabeth's death to a scorching summer heat wave, it's been a record-breaking year for the UK. Here's Bloomberg's Irina Angel and Celia Bergen counting down to some of the country's biggest moments in 2022.
What a year for the UK. Record after record broken.
And new ones being set.
Students of the future, you're going to have loads to revise one day when it comes to 2022.
Well, we've actually lived through it.
So here's a quick recap of the last 12 months. Let's begin with the most somber moment, the passing of Queen Elizabeth II in September. 7 decades on the throne, Britain's longest serving monarch, 15 prime ministers, and, of course, the queue.
From the longest reign to the shortest run, Liz Truss was Prime Minister for just 49 days. Still, she managed to sink gilt markets and send the pound to a historic low. Now, the government is cutting spending and raising taxes.
Next, prices. Everything going up, up, up and fast. Take an English breakfast.
Butter, £3.30, up from £2.60 last year. Eggs, £2.40 from 2. Bread, up 18%, let alone the gas to cook it.
Today, inflation is at a 40-year high. That's the worst since the first Indiana Jones film. Want more records? Well, how about record heat? In July, temperatures topped 40 degrees for the first time. Train tracks buckled, fires broke out across London, and all the while, England was experiencing its worst drought in years.
Let's not forget the reasons to cheer. The Lionesses won the Euros, the first English Cup in 56 years. They got to do it here, at Wembley, with 87,000 fans. The most for a UK women's game ever.
Climate, politics, royals, sport, nothing was spared this year. So what's in store for 2023?
If 2022 shown us anything, we'll just have to wait and see.
Bloomberg's Serena Angel and Celia Bergen there on the UK's big year. Now, we're joined again by Bloomberg UK's John Stepek. John, I mean, on the markets, it was also a crazy year. What was the most memorable day or week for you?
I mean, it had to be the gilts meltdown in September.
Was something else.
Yeah, that was one of the most striking moments I've seen since 2008, because the speed at which that unravelled was actually slightly scary. But also, what I found really interesting about that is that unpacking what actually happened is still quite tricky.
Yeah.
It's very easy to kind of point to the Truss government and Kwarteng, and that definitely was the match that kind of ignited the bonfire. But I think that whenever we look back on this, the fact that the defined benefit pension schemes were so heavily into these LDI, liability-driven investment funds, which again was the product of the low interest rate environment and also regulations. It'll be interesting to see how that eventually gets unpacked.
But John, so if you think about the markets, and this is something that I've been thinking quite a lot, it's pretty incredible that actually when you see how many companies were leveraged, parts of the market that were leveraged, that you can go from 0.5% interest rates to over 3 so quickly without it having a huge fallout.
Well, I think the most interesting thing there is that since 2008, and this is one kind of weird kind of benefit of the fact that the UK was sort of at the centre of that crash. Like, consumers have deleveraged to an extent, and corporates have deleveraged to an extent. I think the riskiest areas are probably within the kind of private assets law, because a lot of money is kind of like basically vanished from the public markets, and actually in a weird way from the banking system. And then some of this kind of leverage has gone elsewhere. And there's probably a lot of privately owned assets out there that have got a price tag that says one thing. It's actually probably a lot lower than it really is.
So maybe that's a story for 2023.
I think so.
John, thank you so much. John Stepek there from Bloomberg Wealth. You can read more, of course, from John in the Bloomberg UK newsletter, daily newsletter, Money Distilled. And be sure also to subscribe to Bloomberg's In the City podcast. That's out today. This is Bloomberg.